Gary Dougan joins us in the studio, Chief Investment Officer, Emirates NBD. Gary, morning. Thanks for being with us.
Good morning.
I know we're going to talk about India in some detail. You've just come back from India. First of all, though, your thoughts on the investment opportunity in the Commonwealth of Independent States. Of course, Russia is the biggest market there, perhaps the more mature market and the one best known to emerging markets investors. What are the potential opportunities in Russia at the moment?
Well, I think we're coming off the back of a 2015 where we were all surprised with the very strong performance of Russian equities. Clearly, people have got comfortable with the politics. That has been one of the reasons that investors globally have just turned away from Russian assets. Secondly, you've got to believe that we're going to see a low point here in the oil price and things will improve, improving the macro backdrop to the Russian market. But when you look at it from 1, 2, 3, 4 years from now, you say, well, one, we think an oil price will recover in the second half of this year. Secondly, I think commodity markets, we're probably seeing, we think in 2016, some of the worst performance of these commodities before they start to improve. So any weakness that we see either in Russia or in some of the other smaller stock markets of that region, I think 2016 could be the year when you start to step tentatively into these markets by investing.
The valuations look very good. The MISEX, the main Russian index, typically the price-earnings ratio is in sort of mid-single digits there. I think it's 7 and a bit at the moment. If you factor in a very weak currency, if you're brave, potentially, this is a once-in-a-generation investment opportunity, but of course there are risks associated with that.
Very much so, but it could be one of those markets, such as our own regional markets here, where if the oil price, as we've just seen in the last few trading sessions, starts to find a floor, and we can kind of persuade ourselves that the upside is $10 to $20, then the Russian market could go from a PE multiple of 7 to 9, and you make a significant gain.
Look, I mean, we're talking the CIS Global Business Forum where we're attending here at the Atlantis Hotel, but are we really talking about the Russian Business Forum?
No, well, I think if you were talking about the next 12 months and an equity investment, yes, you're talking about Russia because it's just the largest by a long, long way. But if you're talking about the next 4 to 5 years, the developments in that region, the amount of infrastructure that is constantly being put in place in order to draw that region into the rest of the world, I think that's where the longer term opportunity is. So I wouldn't write it off as, no, this is not somewhere where even today you might find a good investment opportunity.
A romantic trade corridor, the Silk Road, which countries along that road, the sort of former Russian states, now the CIS, which countries stand out for you as being on that list in 4 years' time?
Kazakhstan for definite. I mean, I've traveled there a number of occasions, and most recently last year, and you go to Almaty and quite frankly you could be in Frankfurt. I mean, you see BMWs, Mercedes everywhere, you see high quality roads, you see people driving at sensible speeds. You think this is true developed world. Now, Kazakhstan is a vast country, and people will tell you some bad stories about other cities, but it does have the mineral wealth. It has, I think, a population very well educated with a lot of opportunity for the future.
This is oil wealth primarily, isn't it? How much does that extend across the other former CIS states?
Well, again, you tend to get more difficult because it's virtually mineral by mineral as you go through up to the Belaruses and some of the states further down closer to India. I think the link that's been made up through Iran, the link that goes in through Kazakhstan, connecting all these countries together is a little bit like opening the Wild West in the United States when they build railway lines across the country.
Go west, young man.
Absolutely. So you open a corridor development, and that, I think, when you're looking around the world at the moment for good, positive, long-term stories, is a standout.
So for people in Dubai, go northeast, young man.
We could stop off in Kazakhstan on the way to Vladivostok with Igor Egorov, couldn't we? We could make a week of it. This is gaining momentum. Gary, maybe you can join us now. Joking apart, of course, oil critical for many of the CIS states, critical for us, and yesterday we had this big deal between Saudi Arabia and Russia with Venezuela and Qatar also at the table. What's the 60-second Gary Dougan take on what they agreed? Was it a deal or a non-deal?
No, I think it's a deal. I mean, we're kind of maybe grasping at straws a bit. It is just an agreement to freeze production at the levels that we saw in January. People have been hoping that some capacity will be taken out of the market. But I do think we've got the building up now of a little bit of excitement that the oil prices could be biased to the upside rather than the downside. That's very crucial for the markets and for confidence.
Is staying still good enough? I mean, we've got a lot of other countries knocking on the door, Iran, Iraq, wanting to put their extra supply onto the market. They want to grow, they've got infrastructure spend, and they want to develop and almost in some ways play catch up. So, is standing still good enough?
I think standing still is probably as much as we could achieve at this point. But I think what it will do is squeeze some of the bears out of the market. A lot of financial investors, hedge funds, have been betting against oil, dragging it down. At some stages we were thinking we were going below 20. I think that risk has now been taken away.
Let's talk about India. It's a country where you spend an awful lot of time, big investment opportunity there. We've got a budget coming up in about 2 weeks' time. It's the world's fastest growing major economy. What are the new trends in India that you are seeing? Of course, we had His Highness Sheikh Mohammed bin Zayed from Abu Dhabi there just 6 or 7 days ago, looking at opportunities for UAE investors. What do you see there?
I think that the next stage of development there, at least politically, is going to be a greater focus on the domestic economy. And that's important because we need to see these GDP growth numbers not just be a one-off, but a constant growth rate of close to 7%. So how will they achieve that? Number one, I think there'll be another big significant investment in infrastructure. We've seen some good investment already, good spending levels, that will be picked up. Secondly, there's a very significant increase in wages coming through for the public sector, which puts billions of dollars equivalent of rupees into the local economy in terms of immediate spending. And the final one, so important, the agricultural sector has really been hammered for the last 2 years. We think there will be a major relief program through, again, significant investment.
We spoke to the president of the World Bank just a week or so ago when he was in town, and his big theme, speaking at a conference in Dubai, was inclusive governance and inclusive growth, making sure that, okay, you can see these 7, 8, 9% GDP growth figures in a country like India or China, but it can't just be the richest 20% that benefit, it has to be the poorest 20% that benefit as well. Are we seeing enough in India to make that happen?
I think to date probably not, because most of it being focused on big business and attracting capital into the country that was only going to reinforce the wealthier people in the country. But I think this budget, and I think the next 2 to 3 years of this Modi government, will have to look back into the domestic economy. It's going to have to look back to the individual voters, and that's why I think the focus on agriculture with this budget will keep that balance.
Very quickly, some of the big investment stories and themes that you're going to be looking at this week that could be impacting portfolios.
I think the most important thing is the oil price. If we can find stability to the oil price, then some of these risk markets that have had a dreadful start to the year could start to rebound.
Gary Dougan is the Chief Investment Officer of Emirates NBD. Gary, it's always nice getting your thoughts. Thanks very much indeed for joining us this morning here at the Atlantis Hotel at the CIS Global Business Forum.